Hi there. You are watching the FinTech Magazine Show, brought to you by FinTech Magazine, InsurTech Magazine, and BizClik Media Group. My name is Scott Birch, and as you know by now, every 2 weeks we bring you the latest news, analysis, and opinions from the wide world of FinTech and a little sprinkling of InsurTech too. And we bring this to you on LinkedIn, on YouTube, and via our other digital platforms as well. Now, joining me today, as ever, is FinTech and InsurTech editor Joanna England. Fingers crossed, because Joanna's been having problems with her internet connection. And also Alex Clere. Alex and Joe, please tell me you're here with us today. Yes, you are. How are you doing, guys?
All good, all good. Yeah, we made it.
We did indeed.
We did. Let's, as the saying goes, let's not count our chickens. Seems appropriate for a finance-related program, I'm guessing. But just to remind you all to please come and say hello by posting in the comments section, which you'll see underneath the show, and also to go and vote in our LinkedIn poll, which we run each show as well. Now, Joe, why don't you remind us what the poll is that we've been asking this week?
Sure. So this week we asked our LinkedIn audience, which European country is affected worst by credit card fraud? Is it A, Ireland, B, UK, C, Spain, or D, France? So I'm quite interested to see the results of this, actually.
Okay, and as Joe said, we will bring you the results of this later on in the show. We are going to do a bit of a countdown as well of some of the worst offenders in Europe. And by worst offenders, I do mean by country, not by individual. But we will be sharing that with you later on. But first, let's take a look at the latest FinTech and InsurTech news. Okay, Joe, so why don't you kick off with a bit of a FinTech story?
Yeah, today I decided to sort of focus on a story about top tips for investors navigating the crypto winter. Because, of course, the crypto market's taken a bit of a hammering lately, but there is still a fair amount of activity going on. And there was a little bit of good news recently in that studies are showing that fraud in digital currency investment has actually fallen by 65% over the last year. So obviously there are some variables attached to that, but it's still a positive result given the general state of crypto. So in terms of investment pointers, one of the main ones that was given was not to let the social buzz around an investment sway your decision. Because, of course, a lot of these investments are being flagged up on social media and they're generating a lot of talk and people are getting very excited about it. One of the pieces of advice was just don't take that too seriously. Make sure you do all your own investigations and your due diligence to make sure the investment is sound. And then secondly, which is a fairly obvious one to me, but maybe not to some others, think small sustainable investments at the moment in currencies that generally have a good reputation. I mean, it may or it may not pay off, but it's better to lose a little than a lot. So just, invest within your financial means. Another tip that they came up with was be patient and hold your nerve, which I thought was interesting because a lot of investors panic when a crypto winter hits. And they can end up making decisions that they then regret later on, like dumping assets when prices are low to prevent further losses and so on. But I mean, I think we have to bear in mind here that there have been 5 crypto winters since 2017 and 3 since 2021. So just as things go down, they also recover. And then the final point was really, if you're looking to make a big investment, you can always look into crypto insurance because it may offer you some form of protection in the event of something bad happening. So all in all, do research, don't panic, don't buy into the buzz, and just keep an eye on crypto because you may well end up with a good buy at the moment.
Yeah, exactly. There are some good prices out there at the moment, and I suppose the other thing is we should actually say, if you want to visit our websites, if we can just bring those up on screen. So we have fintechmagazine.com and insurtechdigital.com. We talk about crypto on a regular basis, obviously on FinTech and InsurTech. So in a recent show, I know that we were talking about crypto insurance, like you just mentioned as well, Joe. So, the market does seem to be maturing. and there are opportunities, obviously, out there. And as volatile as crypto is, that also means there are, or there is potential to make significant earnings as well. But, we always say this, there is a caveat here. And I'm glad to see we're giving some sound, sensible advice. But, crypto is here to stay. There's no denying that. And I think once people get away from the fact that they all think they're going to turn into millionaires if they invest $100 today, then it should settle down into something resembling a sensible currency, or or basket of currencies. So let's move on to InsurTech then. And Alex, you have a story about one of India's InsurTech unicorns, I think.
Yeah, that's correct. So this InsurTech story is about India's unicorn InsurTech, Digit Insurance. So they've gone ahead and filed for their IPO, and they're expected to go public either later this year or early in 2023. So the company recently received a valuation of $3.5 billion in its latest funding round. That was last year. And according to reports, the company is now seeking to raise an estimated $440 to $500 million through its IPO. Now, obviously, this comes against the backdrop of a difficult financial environment for everybody. It's seen other insurtechs and fintechs delay their own IPOs. For example, the owner of South Korean financial app TOS is pushing its planned IPO back by 2 or 3 years. Digital bank Zopa appears to have put its plans for an IPO on hold for now. And then last November, the founder of payments giant Stripe admitted that an IPO was not going to be an imminent event for them. And that's particularly timely because it looks even further off now with the announcement this week that a major investment at Stripe had marked down the value of its stake. So like I say, Digit Insurance is going ahead with its own plans for an IPO despite these challenging conditions. And there are some things actually that might work in its favour. So India's insurtech sector is enjoying sort of its heyday, if you like, to a certain extent. The country's insurance industry is growing at a compound rate of 10% a year and can lay claim to the second largest insurtech market in Asia Pacific. India also has a relatively low penetration of insurance, meaning that Digit will be probably quite confident on capitalising with sort of the digital first approach that it has. Also, the country has quite a progressive regulatory framework when it comes to insurtech, more so I would say than fintech. And so Digit Insurance is just one of the companies set to benefit from that. Other big names, of course, include Acco Insurance, Turtle Mint. So it does look as if it may be the right time for Digit Insurance to go public. It's still fairly young. It was only founded in 2017, but the company has enjoyed some impressive results. In the last fiscal year, it increased gross written premiums by nearly 100%. Motor insurance accounted for about 50% of that. Health insurance about 10%. It also does travel insurance. So you can begin to see where the biggest areas of focus are for them. And so Digit Insurance, they'll be confident, but they'll want to avoid the fate of India's largest public offering. That was the state-owned Life Insurance Corp. And they dropped nearly 8% on its public debut earlier this month and raised far less than it originally planned to.
Yeah, this is the danger, isn't it? And there have been a number of high-profile IPOs recently that have come out far less than anticipated. But I mean, just to pick you up on something you mentioned there, Alex. You said that company was founded in 2017, and its valuation is what? Did you say 3.5 billion?
Yeah, it was 3.5 billion last year, the last funding round that it did.
Wow, I mean, that's crazy. I mean, I know we're talking about, a fledgling industry here, and obviously there are some meteoric rises, but that does seem quite incredible. If you put that into context of other industries, for instance, mature industries, traditional industries, it just shows the sort of the opportunity that exists there for tech. And obviously, if they launched 5 years ago, then they were right ahead of that pandemic curve as well. So, but yeah, really interesting to see what the landscape is like in India as well as they potentially do file for that IPO. Okay, well, look, we're going to take an ad break now, but don't go away. After the break, we're going to have an exclusive interview that Joanna has conducted with Clere Hamilton from IBM Security Services. And we'll also have more information about FinTech Live coming up later this year. And we'll take a little sneak peek at the new issues of the magazines that are coming out any day now. So don't go away. We'll be right back after this break.
I started Remitly after living abroad. and seeing how painful, how expensive, how inconvenient it was to send money internationally. I started the company to really disrupt the $500 billion remittance industry. Of the $500 billion that is sent home every year, 8% goes to fees. That 8% is $40 billion. $40 billion earned by people living away from their family, missing their family, is not only taken, but it's taken in a way that is not transparent, and the way that it's delivered back home is inconvenient. It takes the power away from the customer. And the great thing is, because of smartphone growth and mobile phone growth generally, you can give the control and the power to people's fingertips to be able to get more money back in a much more affordable, more transparent way. And we focus so much on building out that product that is very much scalable that we're really excited to take it into the backyard of our competitors, because we believe that when you put the customer first and you put the product first, that's how you win. Our business, I think, has the opportunity to really transform hundreds of millions of lives around the planet. Our goal, our mission, our vision as a company is to help those hundreds of millions of customers get that money back in a fundamentally better and more convenient way. And that's what motivates me every day. We've got a really underserved market, an opportunity to create a huge amount of value to customers. And so our job is to really serve that customer, to deliver on our promises so they can actually deliver on their promises to their loved ones back home. And we're just getting started.
Okay, welcome back. Heartwarming video, I think it's fair to say heartwarming, but also showing how fintech can actually make a meaningful difference to people's lives as well. Now, still to come, we've got the results of our LinkedIn poll. If you haven't voted yet, then please dash over there and do that now. And we've got more on the FinTech live events taking place on the 1st and 2nd of November this year. But first, Alex, so we're just talking about Remitly, and we just saw that video. You've got a bit of an update in terms of news activity that Remitly has been involved in.
Yeah, indeed. So little did we know, of course, when we spoke to Matt Oppenheimer, we just saw there in August's issue of FinTech Magazine, barely a few weeks later, they'd be announcing a major acquisition. So if anybody's missed it, Remitly is going to acquire Israeli remittance firm Rewire. That's a deal worth about $80 million. So Rewire does something very similar. It offers a financial services platform aimed at migrant workers. And Remitly has said that it will help them to expand into new geographies. So congratulations to them.
Absolutely, congratulations to them. And obviously, if you haven't read yet the August issue of the magazine, so you can go right now. If we just flag up the websites, please, Ernie. So if you visit our website, so FinTech Magazine and insurtechdigital.com, then you can see all of the news, all of the features, all the videos that we create, and you can read our digital magazines as well. So you can go and catch that interview and the full video and interview with Remitly in the current issue. Now, as I said, we will be looking ahead to the September issues of the magazines. But before then, we've got an interview. Joe, actually, you did this interview. Why don't you introduce this one?
That's right. I spoke to Corey Hamilton, who is the partner director of IBM Security Services. And we discussed how political instability is affecting fintech and which sectors are most at risk. Now, this was also a very enlightening interview for me because he was very upfront about the risks associated with new financial technologies like open banking, which could potentially provide greater exposure to cybercrime because they provide access to data for parties that otherwise wouldn't have it. So for me, that was a really interesting conversation. But you can read the entire interview on our website. And right now, here's a clip of the main conversation. Can you tell us how the current political instability globally is in general affecting cybersecurity and the rate of attacks in relation to fintech?
Sure. I mean, you can't ignore the geopolitical, climate of the Russian war in Ukraine. You know, we've certainly seen various attacks within the financial space as well as within, the governments within Ukraine and Russia. I'll say that certainly banks have been impacted on both sides or within both countries. We've actually seen some of the largest distributed denial of service attacks ever reported due to this kind of political instability. I'll say we have not observed widespread attacks, say retaliatory attacks against the West or the Western financial banking system due to the wars. I'll say we have certainly seen a uptick, though, in just general organized crime. So the onslaught of attacks are no longer immature, people in basements, et cetera. These are highly functional organizations that are focused on organized criminal activities within the cyber realm. I'll also say that, there's also the political climate of inflation and coming out of the COVID-19 era where there are no shortage of people that are and organizations that are, always looking for the bright side. And so when phishing attacks come in of, playing against somebody's, financial position, then that's a lure where they typically would not, but may succumb to, that click and open up their environment due to a phishing attack. So the political instability, as well as just the global economic landscape that we're in, has certainly been a ripe environment for I guess, more impactful breaches and a increase in the amount of breaches that we're seeing.
In terms of the fintech and banking industry, there have been so many innovations, especially over the last 5 years. And what is your experience in terms of open banking and embedded finance, in terms of the levels of vulnerability to cyber attacks? Have they fortified things, or have they made things easier for cyber criminals?
I'll say, open banking and, embedded finance, there's a reason that organizations are implementing those, and that's largely driven to, customer demand, increasing the availability and the ease of processing transactions is an opportunity for organizations to grow market share and to better serve their customer. I'll say that it has certainly been a challenge when it comes to securing that, and that's for a couple of reasons. One, through open banking, when you open up through the use of APIs, customer data, and potential processing data, there is a risk that as it becomes more open, you are by nature giving others access that traditionally would not have that. I'll say also that the fintech space, though open banking was pushed down through regulations, many fintech providers are not regulated, or certainly not regulated to the same level that traditional banking organizations are. So you've got organizations that really grow from nothing. Within a matter of each week, you're seeing new fintech providers and how they are making their success is they've got a new tool, a new process, something that's very quick, very easily can enable that customer journey, which organizations are looking to. But they're doing their speed to market and their ease of the solution. Well, if you've got speed and you've got ease, that doesn't necessarily make it the most secure. And then I'll say that typically, these organizations, the fintech providers, they are providing applications, they are providing software, they're not security companies. So, there's this happy medium that comes around where an organization, you can either have it, very quickly and ease of use, and security might be lacking. So it's that delicate balance that we're seeing where fintech are certainly, due to the, I guess, limited regulatory requirements for controls, that they may not have the same level or practice the same and rehearse the same as a more traditional banking institution would.
Okay, sorry, you caught me unawares there. I was watching that video. It caught me unawares. Apologies for that. Okay, so Joe, really interesting conversation. We've got a bigger slice of that interview appearing on the website, or is it appearing in the next issue of the magazine?
It's on the website now. So we've got a link. We could probably show it at the bottom of the screen if you'd like to do that, Ernie. But yeah, so really, really interesting conversation and saying a lot of things, I think, that other people don't necessarily say about the new financial technologies. I think what comes across is that there's just a lot of maturation required because obviously as cyber attacks become smarter, faster, more sophisticated, fintechs need to fortify themselves better.
Absolutely. Okay, so as Joanna said, you can read more about that on our website, and Ernie kindly put the URLs up. But hey, you should know those URLs by now. You know, they should be embedded into your bookmarks. But it's nearly September. It's Friday, the 26th of August, and that means we've got 2 new magazines to look forward to, actually. Now, it's actually a public holiday here in the UK on Monday, so I believe that these new issues will be hitting the digital newsstands on Tuesday of next week. There's so many great interviews and features in these, so make sure you visit the websites where you can catch the new issues. But let's have a little sneak preview, shall we? So Joe, why don't you pick something or a few highlights from the September issue of FinTech?
Sure. I don't want to give too much away, but we talked to Revolut about what it's like being a decacorn in the current climate, which is really fascinating. And we've also got a deep dive into blockchain. And as you said, lots of great in-depth interviews with industry leaders that are disrupting FinTech at the moment. But that's my spoiler for now.
Okay, yeah, let's not give too much away. And as we said, we've also got a new issue of InsurTech coming out. The reason I say that is because InsurTech is a bi-monthly product, whereas FinTech is a monthly digital magazine. So Alex, why don't you give us a little bit of a tease as well of a couple of things we can look forward to?
Yeah, of course. So coming up in September's issue of InsurTech, we're profiling Sten Saar, founder and CEO of Zego, and how he went from selling notepads to students at university to building $1 billion InsurTech. And obviously, along with the usual insights and interviews, we've got some excellent features on digital transformation within insurance and the rise of automation. But of course, if you want to know anything else, you'll have to wait until it comes out next week.
Of course I will. You see, it's going to be a long weekend waiting for these magazines to land. I tell you, I might be able to slip in to the back end of the website and see if I can read some content before everyone else gets their hands on it. Okay, but let's move on and let's take a look at the results of the poll. So Joe, why didn't you remind us what the question was, and why don't you run us through the results as well?
Sure. So the question was, which European country is affected worst by credit card fraud? And our options were Ireland, UK, Spain, and France. So according to our LinkedIn voters, the UK is the worst affected by credit card fraud. 50% of voters chose that. Spain is next, 28% of voters chose it. France is third with 12%, and Ireland is last with 9%, which I think is really interesting because we've actually got a study now that shows exactly which countries are the most affected by credit card fraud, and it's quite revealing actually because it's not the ones that you necessarily think are obvious.
Okay, all right. So yeah, let's do it.
Yeah, okay. So let's have the countdown. So number 10 for credit card fraud in Europe is Estonia. Now, the data company called Merchant Machine, which produced this study, made a risk score factor out of 10. So if we can just see the risk score factor for Estonia, please, Ernie. Yep, 3.38%, 3.38 out of 10 on the risk score factor. So number 9 is Spain. And on the risk score factor for Spain for credit card fraud, you are looking at a figure of 3.5 out of 10, which is fairly high. Number 8 is interesting because Sweden is obviously the most cashless country in the world right now. They will almost certainly be cashless by 2023, but they've got a massive problem with credit card fraud, clearly. And their risk factor out of 10 is 3.71. Moving swiftly onwards, we've got Hungary, and their risk factor out of 10 is 4.14. Then we've got Denmark, number 6, which again surprising, very, very high, 4.53 out of 10. So really quite a large figure there. And then number 5, we've got Malta, even more unusual. I'd never put them as a hub for credit card fraud, but they're a tourist destination, so perhaps that's where that comes from. 4.83 out of 10. Number 4 is Luxembourg, 5.16 out of 10, creeping up. Number 3 is France, 5.62 out of 10 for credit card fraud. Number 2 is UK, which is 5.97 out of 10, so pretty high rating there, UK. And number 1, the most surprising of all, Ireland, right? That caught me by surprise. 6.12 out of 10, a risk score for credit card fraud.
Well, it not only caught you by surprise, Joe, it looks like it caught our 697 pollsters by surprise as well, because they also had Ireland at the bottom of our selection with 9%. UK at 50%, perhaps understandably. But yeah, Ireland, surprisingly high, and certainly not what our readers were expecting either. Any ideas why this might be the case? Any theories?
Well, I suppose Ireland is a huge tech hub, so there's an enormous amount of change and innovation happening there. Not only within technology and data, but also within the payment space, obviously. So I would presume that that's got something to do with it. They've got a lot of influx, international influx. They're a small country. I suppose we've got to take into account that this is relative according to population, et cetera, and influx of people. So maybe that's an indicator of why. But interestingly, Ireland was only the second highest amount of money lost to fraud per 1,000 card transactions. So for every 1,000 card transactions, they lose 5,145 euros. So this is the second highest. The first highest is actually France, where you can lose 5,521 euros per 1,000 credit card transactions. But I don't know, maybe people shop more in France. So that's why.
I'm sure there's some reasons here. I mean, one thing I'd like to know is, is this transactions that are occurring in Ireland or being transacted in Ireland? Because as you said, there are some e-commerce and technology giants with their European bases in Ireland, for instance. So that might go some way to explain why there are so many attempted credit card frauds or frauds based there. One thing that interested, actually, you mentioned Malta there, and Malta certainly in the last 10 or 20 years has become or was a base for online gaming or for the online gaming industry. So that could be one of the reasons why Malta's score seems particularly high, again, because there are probably a lot of credit card transactions and there might be a lot of attempted fraudulent transactions because of the nature of the industries that are based there. But I'm speculating. Anyway, really interesting. Thanks for putting that together, Joe. Now, we're coming towards the end of the show, so I just want to remind you of the important dates for your diary. I'm sure you've already got these, not even penciled in. These will be hardwired into your Google calendars by now. And that is, of course, FinTech Live, which is returning as a hybrid event in London. That's taking place on the 1st and 2nd of November. Now, previously, we've held these shows at Tobacco Dock in London, but we're moving to a fantastic new venue, which is called Magazine London. If you don't know it, go and check it out. It's in Greenwich, sort of next to the O2. For anyone who's familiar with London, you'll probably know the O2. It overlooks the River Thames and has an amazing vista over Canary Wharf as well. Well, you're not there for the view. It's what inside that counts. And we've got loads of fantastic speakers lined up covering everything relating to the hottest topics in FinTech and, of course, in SureTech as well. So tickets are available now. Go to the websites. If we can just put those up again, Ernie, please. If you visit our websites, so fintechmagazine.com and insuretechdigital.com, you'll be able to find out more information about the live shows there. In fact, I think there is a drop-down menu in the top that says live shows. It's as simple as that. Click on there and it'll take you through to the information. Now, we've run out of time. We're half an hour in. So that's all for today. Thank you so much. It's always a pleasure to speak to Joe and to Alex and to hear their brilliant contributions. Thank you, guys. And of course, to the video production team and the marketing team as well, who've all done a terrific job today. We'll be back again in 2 weeks' time with more FinTech fun facts and some news. And of course, we'll be able to show you those issues of the magazine that we've been singing about all day today as well. But until then, bye for now and enjoy the new issues of the magazine. And if you're in the UK, enjoy a long weekend. Bye, everyone.